This meeting
right.
is being recorded.
All right, I'm going to hand it over to Radlam, and he's going to go over the Itin program, okay? All right, thank you for attending.
Thank you, Ruben. Good morning, everybody.
Hey, good morning.
Good morning.
Good morning. So here's here. All right, let's so let me flow with this. So today we got Brenda and myself will be going over the it's a non-QM product. So it's like it's called the Itin loan program. And so basically it's a non-QM solution, like a product designed to help a borrower who lives and works in the US with basically an individual tax ID number, but no social security number. So again, not everybody fits into the traditional, kind of box. I guess most lenders, require nowadays, right, a borrower to fit into. So again, the Drmc Diamond Residential Mortgage has been like quite creative in the last couple of years in trying to come up with new ways to basically reach the prospective potential buyers who have not been able to qualify for a loan, basically using the traditional method. So that's why a lot of our customers come to us as their preferred lenders, because we are able to offer them creative solutions. And the last time I used this chart just to give a little comparison, like among different type of lenders. So of course you have your traditional banks, which are your Chase and Wells Fargo's and Citibank, stuff like that. I mean, basically they focus mainly on savings and checking accounts, and usually and they also offer loans, but their loans are the traditional loans, your conventional FHA, VA, stuff like that. But usually they have very fractured operations, meaning it's basically it's not centralized. A lot of their underwritings are located in one branch or one part of the state, or maybe even in a different state, and processor would be located also at different locations. So that's why we consider them like fracture operations. And usually they go over after like your A+ borrowers, the borrower with the best profile, financial profile. And then you have the second type of lender would be your Rocket Mortgage, your Guarantee Rate, your Lending Tree, type of online type of lenders. And their main focus is basically on volume and trying to generate as much loan as possible. And they usually go after the more like medium range, B+ type of borrowers. And they usually don't basically offer non-QM product directly. They usually broker those loans out to different investors. And then then you have us, your preferred lender, and our main goal is to really help the real estate community generate as much transaction as possible. And basically we that's why we always try to look for creative solutions, creative loan programs to help our real estate partners basically offer as much or be able to do as much transaction as possible. And we basically with our non-QM product we control the underwriting process, because we underwrite a lot of these programs in-house. So we usually don't add overlays. Overlays are basically additional requirements on top of what the investors already, I guess, requires for their loan product. And then we usually don't add anything additional on top of that. That means we don't have any additional overlays on top of these products we offer. And again, we do have a dedicated non-QM department to handle non-QM loans. So as your preferred lender, we work hard to provide you, our real estate partners with and their customer with, exceptional services, and we try to offer the best products in the industry. So in recent years, as I indicated early, the Diamond Residential has really become like a very like a leading kind of company in terms of promoting flexible and creative solutions for our borrowers, and who don't fall within the agency guidelines, who don't fall within the traditional guidelines from Fannie Mae, Freddie Mac, and VA, FHA, USDA. And so these new solutions are collectively known as alternative loan programs, or non-qualified mortgage, or non-QM, commonly known to real estate agents and lenders out there. So what is non-QM? Again, non-QM is basically a loan designed to help home buyers and homeowners who cannot meet agency guidelines, who cannot meet the Fannie Mae, Freddie Mac, guidelines, and also FHA, VA, USDA guidelines. So what non-QM is not a stated type of income, and you may have heard in the lending industry, I guess there are a lot of lenders who offer steady income or no income type of loans. So we really don't offer those type of loans. I mean, our loans are not really stated income or no income. And the non-QM product is not considered like a predatory or subprime type of loan, which many of you who have been in the business saw before the 2010s, before the crash. So basically, a lot of those loans, subprime loans, contributed to the crash in the real estate market. And the non-QM loan is not negative amortizations. So a lot of these loans are actually 30-year fixed, 15-year fixed. And then we have 5-year ARM, 7-year ARM, and even 10-year ARM. So most of these loans are actually amortized for whatever period the borrower picks. And usually on a primary home, even if you use the non-QM product to purchase a primary home, there's no prepayment penalties. So prepayment penalties usually only applies to investment property. And even on the investment properties, you do have an option of going without the prepayment penalty, but in exchange, you have to go with a higher rate or higher fees. And non-QM products, don't come with super high rates, and the rates are actually pretty reasonable. And they're nowhere near your hard money or private loan rates, which nowadays are easily above 11-12%, plus 3-4 points. And the non-QM products are actually very stable. The lenders have been offering this type of products for the last probably 5, 6, 7 years. So they have very good track record in terms of their low default rates. So actually this is a very good product. So this is just a list of some of the non-QM products Diamond offers, and of course we went over the DSCR loan for investor. We went over the bank statement loans. for self-employed and small businesses. And so today we are going over the Itin loan. So our Itin loan program, can really help you basically extend your real estate business beyond the your normal kind of traditional, right, buyers, who would need to qualify loan using their financial documentations. So the Itin loan is really designed to help you broaden your reach into a different part of the market, and hopefully to help you close more transactions. Somebody turn on the light.
Maybe motion sensor. Because the light is connected to the other offices as well.
Oh, really?
So it's
Okay. Okay. I think it's okay. Yeah.
We can see it.
Okay. Sorry. Let me. So this is a little maybe it's like statistic or on Itin. So I'm not sure if you are able to see here. Basically, it says right here, Itin is, as of 2012, the IRS had assigned over like 21 million Itins number to taxpayers and their dependents, and the majority of the Itin assigned to you could see here, in terms of the country. So Mexico, does get basically the majority of the Itin numbers, and then you have Guatemala, you have Honduras, El Salvador, India, Canada, China, and then the rest, are divided among other countries. So for sure, so Mexico and people from Central America basically get the most of the Itin numbers issued by the IRS. I only have the numbers back, from 2012, but obviously, within the last 10 years, I'm sure there were like a lot more, couple more millions, I guess, Itin numbers were issued by the IRS. And then 42% of the Itin borrowers fall under the, for fair credit range. And so most of them do have a credit scores. And more than 50% of the Itin borrowers, they're rent qualified to buy a home and don't know about it. So just imagine, you have like over probably, nowadays, probably maybe 30 million people with Itin numbers, and half of them, maybe more than half of them, don't know they could potentially get a loan. And remember, the Itin, the people who basically file their tax return using the Itin numbers, most of them don't have the social security number, and that's the reason why they use the Itin number to file for their tax return. And this is a little definition of what is an Itin. So the Itin stands for individual taxpayer identification number. So it is a tax processing number issued by the IRS to individuals who are required to, to have the taxpayer identification number, but who do not have or are not eligible to obtain a social security number for one reason or another. I mean, there are various reasons why somebody might not be able to obtain a social security number, and usually this applies to non-resident or foreign nationals. So an Itin loan is again a non-QM product designed for individuals who live and work in the United States and who have filed a tax return using the Itin number. So, and again, these individuals are not eligible for a social security number, and so that's the reason why I guess the Itin program was created, basically to allow individuals with Itin numbers to get a loan to buy a home. And with the ITIN program, we could go with full docs, just like a traditional loan, right? Your 2 years of tax return, pay stubs, W-2s, stuff like that, right? The traditional requirements. Or we could go with alternative documents type of, basically documentations. So your alternative documentation would be, I'll go over that information shortly. So how does an ITIN loan work? So basically, you could use the ITIN program to purchase a property. You could do a cash out refinance if the borrower already has a property and they want to do a rate and term refinance, if it makes sense for them, right? To maybe to reduce the interest rate, or it could be used to cash out, equity from their existing home, to invest more in more maybe investment properties, or they could use the cash out for other purposes. And of course, the borrower needs to have an ITIN number. And basically the ITIN number is issued by the IRS. And when they issue the ITIN number, they usually issue the number in the form of a letter. So they would send a letter to the borrower, and on that letter, you would have the borrower's ITIN number. And the program also requires the borrower to have a valid ID. So a driver license or an ID issued by the state, or it could be a passport from their own country, as long as it's valid. So it has to be valid and unexpired ID. Yeah. And the borrower must have filed the tax return using the ITIN number. So basically, that's part of the requirement is we have to look at their just 1 year of tax return, and the number used to file that tax return has to be an ITIN number, not a social security number. There are a lot of individuals for one reason or another, they don't have a social security number, and maybe they may have used somebody else's social security number, and we cannot have that, right? If we see the social security number, then we will have to find a different way to unsee it. Basically, we have to use other documentation to instead of using that tax return with the social security number. And the terms, so basically the long terms for the ITIN program could be 15-year, 25 years, or 30-year fixed. Like I mentioned before, it could be, so in terms of documentation, we could go with a full doc, just like a traditional loan, or we could use alternative documentations. For example, we could use, if the person is self-employed, we could use a profit and loss statement prepared by a CPA, or we could use like 12-month, 24-month bank statements as a way to qualify them. And then also
1 year?
1 year. Yeah, we only require 1 year for documentation, for income documentation. And then also we could use asset depletion. Asset depletion is a type of qualification where we use the person's assets, such as their savings, checking, funds in their savings account, checking account, could be a retirement account, could be stocks, bonds, stuff like that, all the assets. So we use the assets as opposed to income, from their job to qualify for the loan. So as for the borrower, again, we, on a loan application, of course, we need to have their name, their ID, the ITIN number, and we do require, them to tell us their resident, the address, in the last 2 years. And if they own any property, we do need like a list of property that they own too. And, we do need their employment information also. If they're self-employed, of course, we just need a company name and maybe business license. And if they're employed, of course, we need the employment information from their employer. So we need, again, we just like traditional loan, we need to know the history within the last 2 years. And again, we just need the most recent 1-year tax returns. So we don't need 2 years, we just need 1-year tax return. Or again, if they also work for somebody, then we need pay stubs, we need W-2 also, but only 1 year. Pay stub, it would be just the most recent 1 month. And non-permanent residents, okay, non-permanent residents usually, I mean, the definition is basically somebody who doesn't have a legal permanent resident or green card, who is not a U.S. citizen, but who is living and in the United States. So they're not permanent, but they are living in the United States.
And how about the credit score?
Yes, so here, I'm sorry. Credit score, I'm gonna have let Cecilia ask about credit score. So there is a minimum of 600 FICO score requirement, but we could actually go with, if somebody doesn't have a credit score, we could actually do the loan without credit score also. So we would actually usually default like 620 FICO as their score, right? So actually it's not required for them to have it.
And then they need to buy additional insurance.
There's no additional insurance requirement. You need for what? For the property, for the mortgage, like a PMI, is that what you mean?
Yeah.
No, there's no PMI. It doesn't come with PMI.
But that 600 FICO scores,
Mm-hmm.
that means that the rate will be more expensive.
Yes, exactly. So obviously, it's just like any type of loan program. When you have low FICO scores, you tend to have high, high interest rate, and maybe your loan to value. That means you won't be able to borrow as much as somebody maybe with higher, FICO scores, and they kind of adjust, to make sure the lender, try to adjust all the basically the amount, borrow could borrow and stuff like that. Just yes.
Yeah.
I forgot your name. I'm so sorry.
Jeffrey.
Jeffrey. Yes.
Yeah, I
Jeffrey.
found it with that some qualification should have. Of course, there should be an income level qualification, because right now with the current California is very expensive right now. Property values. So probably there's an issue in income level.
You talking about is there like an income maximum for this type of program?
Yeah.
Oh, no, there's no maximum income. So it's not like a home down payment assistance program where you have income restrictions. But with this program, actually having income is good.
Yes.
The more the better.
Could they qualify? They say if their income is only, let's say per annum, let's put the number per annum, let's say 40,000.
Right. Then they might not be able to qualify, because remember, it's a full documentation, or we could use alternative documentation. So what that means is, if they are not able to qualify using full docs, the tax return, pay stuff, W-2, then we could make, if they're self-employed, maybe we could do a profit and loss type of statement prepared by CPA without the support of, like tax return, pay stuff, W-2, or 1099. So there are alternative way we could actually help to qualify them with that, even if they don't qualify using traditional full doc type of requirement. Did I answer your question, or you still not sure?
When you buy a property,
Right.
There's a price level. It depends where, if you're a public.
Yes, of course.
Probably if you're in the Bontoc, you could buy probably 300,000 or 400,000.
Right,
So
right.
if you are in the suburb, you can buy in California below, below 500 or 600,000. Now, based on that, what my thinking is that, there will be a monthly mortgage, depends on the rate. Of
Yes,
course.
yeah.
I'm just thinking, how could I qualify it? My
Let's-
customer,
yeah.
customer who is a farmer who's only earning such income.
That's actually goes to like more like a scenario, right? Individual scenario. So let us talk to you, afterward, and maybe try to figure out like what numbers would, what type of income that person would need, right, to qualify for that type of like a loan. Yeah. So we'll go over that with you. But I just want to quickly, I mean, it's almost done. I just want to quickly go over like the type of properties. So the non-QM, I'm sorry, the Itin program could be used, purchase a primary home and a second home. So unfortunately, it's not used for investment property. So investment property, we do have our DSCR loan, right? Investor cash flow program. Again, it's just a non-QM product, no need for income qualification, just your appraisal and 640, 660 FICO score. So that's for the investment property. So but with the Itin loan is basically designed for, for maybe first-time home buyer or somebody who's buying a second home. And it does it could be used to buy a mobile home or manufactured home also. But I have not done a mobile home using this program, so I don't know the specific. I mean, for under the Itin guidelines, so we have to go. Basically, we have to check with the investor, on a case-by-case scenario if it comes to a mobile home situation. And again, and it could be used on non-warrantable condos. Again, warrantable condos are condos who don't meet the basically the guideline provided by FHA, VA. I mean your the traditional basically guidelines. And most of the properties are considered too, and a lot of times it has to be case-by-case basis. So we do look into all sort of property types. But the only type of property we won't be able to finance using Itin loan would be your commercial loan, commercial property or property located in rural area or agriculture area. And these are just as like highlights on the program. So it could go up to 80%. Actually, before the pandemic, actually we could go even up to 85% loan to value. That means only 15% down. But recently the investor, I think, kind of adjusted and basically their requirement, and now we do need a minimum of 20% down on the program. I mean, I try to run different scenario, using something maybe above 85%, but we couldn't qualify. So I believe they adjusted their guideline, their requirements. But the good thing is debt to income ratio could be up to 55%, right? Which is actually 5% above your conventional loan. Conventional loans, you could only go up to mostly 50% on conventional loan. Maybe FHA, you could go maybe sometime up to above 50. And again, there's no social security number required for this type of loan. No visa required. So if somebody is considered foreign national and they're here and they would like to buy a property, so we wouldn't ask for a visa or social security number, as long as again just keep in mind that the requirements they got to have filed their tax returns, using the Itin number, for probably 2 years minimum. And gift funds are allowed. So even from employer, if you work, if the borrower works for somebody and the employer is willing to maybe donate or some of the down payments proceeds to them, and So that's acceptable also. And so down payment could be up to 100% of your 80% loan to value, right? So as long as they have, the borrower has 20% down for down payment, the rest could be in the form of a gift from somebody. We don't need to, get a IRS tax transcript for this. Again, we just need 1 year of tax return document. Minimum FICO score 600 with some restrictions, of course, like Rosa mentioned, I think. With maybe higher FICO, higher interest rate and lower loan to value. So if your FICO score is 600, most likely you would only be able to borrow up to maybe 65-70% of your purchase price. And it says right here, so no score is allowed also. So basically, again, you don't need to have FICO score. So we could actually go with without FICO scores. And again, with some restrictions, again, the restriction would be maybe higher interest rate, maybe lower loan to value, just like when you have a low FICO scores. And we could also, so how, I guess maybe people are wondering, is it possible to pull like a credit report using the Itin number? And so the answer is yes. So there's a way to actually pull credit scores using the Itin number. And the good thing is we only use TransUnion score to qualify for the loan. So we don't use the other three. The other two, Experience and Equifax. So I just quickly, basically just a final thought. The Itin program is, one of the least known, basically loan program out there. And most lenders don't offer the Itin loan program. And that's why a lot of their loan officers are also not familiar with the program. So this is obviously true with maybe real estate professionals as well. If you have never run into a borrower maybe who needs an Itin loan, so you wouldn't know about the Itin program. And so for that reason, I mean, it's really, an advantage to know about the program. So when you run into a prospective, customer who maybe are in that situations, right, who don't have a social security number, but who have been, working, filing their tax return year after year, using the Itin number, and and maybe they're interested in buying a home, they have 20% down, then you should definitely, try to work with them to try help them get an Itin loan, and that is going to help you, generate more, transactions. So, we don't like to say that this program is designed for undocumented, basically individuals, but basically, I mean, it could be applied to foreign national who enter the U.S., for example, with work visa, visitor visa, and for one reason or another, maybe they no longer have valid visa, and so maybe last couple of years they've been working and filing their taxes using the Itin number, not the social security number, right? So, and they have money, they have, savings, but they don't have a home. So, the program would be perfect for them. I mean, there are easily maybe, over 15 million people or more with what the number shows that the Itin numbers, the IRS actually issue over easily, I think by now, maybe over 30 million, Itin number to people and their dependents. So at least half of it, right? I mean, even if you can capture like 10%, 5% of those millions of individual with Itin number, that's a huge market. So, and the Itin number is not a very old program. It's pretty new. I mean, it's just came about within probably the last 5 to 10 years. So just imagine a lot of people have not been using the program. So this is really a market maybe you want to keep an eye on, and talk to as many people as possible who might fit into this profile, and that could be a way to really for you to expand your customer base. So I think that's pretty much my presentation is very short, but anybody has any questions on the program? Hi.
I have a question about
Sure.
the gift.
Okay.
Now, let's say somebody gives you a gift, do you have to show where that money comes? I mean, the person that's giving the money, does that person have to show any proof where the money?
Brenda, you want to take that
Yes,
one?
yeah, they do. They have to show verifications of where the money comes from. At least 1 month, also you require.
It means in the bank account.
At the bank, yes. We will require 1 month bank statements from the donor.
Only 1 month.
Only 1 month, to verify that the amount is there, because of the, any
If
Nigerian
the
money or
donor-
things like that.
If the donor also only have the IT number, it still work? If the
Yes,
donor-
yes, yeah, we don't care anything about the donor, as long as the donor has the money in the bank, we could use 1 bank statements to show that he's the one giving the money, and there's no repayment back.
Okay.
Okay, so yeah.
Would it be okay if they send the money directly to
They
escrow?
can do that, but it
If-
depends on what kind of programs that they want to do. If They
Right.
can do it, send it directly to escrow.
Then would we be able to skip the
The bank statement.
bank statement apart from the donor? Just like traditional,
Just a
right?
traditional one,
Yeah.
yes.
So I guess I just want to clarify. So if, let's say, if the donor, right, send the fund directly into the borrower's account,
Mhm.
then of course we need to verify where the fund is from, right? So we would need the I think like one bank statement from the donor, the person who gives the gift. But if at closing, the donor actually wire the money directly into escrow, so it's just like a conventional loan, we would not ask the donor to provide the bank statement, just a gift letter. They just need to sign gift letter. Uh-huh.
So the
Hi.
gift
Hi, Gus. Oh, I'm sorry.
If the
Gus?
donor give me the money to me and put it in my account,
Yes,
I can keep it there for 30 days because there's no place for that.
Yes.
that's true. As long as when we ask
You can
the
give me
borrower,
cash
uh,
and I put it in my bank.
right, exactly.
30
As long as
days
it doesn't
later.
show up on the bank statement, then we wouldn't know where, right? I mean, then we wouldn't ask for the source of that, any deposit, if we don't see the deposit on the,
Ask for source from the donor.
we don't, if the funds is transferred directly at closing to escrow, then we just need a gift letter signed by the donor. But if let's say, if we see if the borrower, provides a bank statement and it showed a large deposit, right, into their bank account, just like conventional loan, we would ask to know where. We ask them where is the source of that deposit. And if they're saying it's for family members as a gift, then we need their family member to provide a
So
bank
you
statement.
still need verification
Yeah.
after 30 days.
Well, again, it depends on whether it shows up on the bank statement or not. If we see a large deposit in the bank statement, then we will ask for a source.
In that case, it has to be seasoned, right? So.
Yeah,
That's what I'm saying,
right.
30
For how
days.
long?
60 days.
Yeah.
Or
Right,
60 days.
right.
That's why it's a wire direct to the escrow
Mhm.
account.
Yeah, then you avoid the
That's the-
situation,
So
yeah.
Yeah.
So the fastest way is to deposit the escrow directly one day.
Exactly.
Yeah,
Then
Or
then
when-
we,
if that money comes from the outside, the bank,
From-
by
from
buyers
abroad?
from the outside, you get the
That's
bank.
another situation.
right,
Yeah, because we have to get currency exchange and everything. So if it's coming from a different country, you mean?
Yes.
Okay, yeah, we will have to, yeah, in that case, it's need a little bit of more details because when escrow will receive money, they have to receive it with the current, with the different currency and everything like that. So, yeah,
Dollar.
on that case, we will need to source those funds out of state.
Yeah, we could
Out
actually
of
use
state,
like
yes.
for a fund from outside the country also. But we would need like a gift fund too, like gift letter signed by whoever outside the country.
It's 60-day season from the donor as well.
No. So wire to the escrow. is
From the borrower.
And any minimum loan amount, 100,000 over?
Yes.
Yeah,
It's 100 and up.
I would say around there, probably 75, 100, just like.
75 is a minimum, but
Right,
it's
right.
100 and up.
Right, okay.
75,000 minimum.
Right.
75,000.
And then you could probably go up to, I actually ran a scenario this morning, and I think you could probably go up to 1.25 million on the purchase price, yeah, so, yeah,
So that's possible.
right.
If we can get, yeah, I can get that 1 million as a gift, that's possible,
As a
right?
gift.
As a gift,
Yeah.
if you have a generous family members, why not, yeah, of course.
And that's all,
No, we don't, yeah, it's a gift, so we don't, we don't have any problem with that.
It's money.
Yeah,
As
exactly,
long as not,
Right.
as long as you're not, what I'm saying, right?
yes, exactly. So we don't have any problem with gift cards, yeah.
Directly to the escrow.
So remember it could be 100% gift,
Correct.
up to after the down payment requirement from the borrower. So anything after that would be 100% gift.
After the down payment.
Right, because there's a requirement, right? Minimum 20% down,
right.
20% down, right, from the borrower. Mhm.
So the down payment is still coming from the borrower or not from the,
A percentage.
from the gift?
Well, it's actually 100%. Technically, the gift fund could be, right? I mean, the gift fund for down payment could be
Yeah, it's
from,
part of the down
yeah,
payment,
yeah,
right?
exactly, could be. Uh-huh.
Right.
Yes, exactly.
Let's say I have an uncle, let's say I have an uncle, he wants to help me.
I know with,
20% down payment.
I know with the lender that we usually work with, they basically, again, they require the 20% to be from the borrower. And then anything after the 20%, it could be from a 100% gift. I'll double check on that. I apologize. Double check on that. This scenario, I mean,
Thank you.
yeah, there's nobody who ever, really receive 100% gift. But in terms of, just like your traditional, right, loan, I mean, you could get basically pretty much 100% gift for down payment and closing costs. So I believe this would apply to that too. Yeah, it's very similar to like a traditional loan too. But if you have any specific question regarding, then we could maybe kind of double check for you. Anybody else has any questions?
Just one last question.
Okay, Jeffrey.
The work history, is this really specific plus minimum 2 years? What is it?
Work history, yes.
Minimum
Minimum 2 years, just like resident also minimum 2 years.
2 years?
So we need 2 years of employment history, but we only need 1 year of tax return. So, but we do need to know that, where they have been working or what, the employment history of the last 2
So
years.
there's no flexibility on the 2 years to 1 year on the work history. Should be 2.
Right. As long as you add up, up to 2 years of employment history, then you get. Disability is not employment, right? So you cannot start working 2 years ago and then 1 year you were on disability. So that should not meet our requirement for 2 year history. Yeah. Hi, Rosa.
I saw that you have also you can do refi.
Yes, you could actually use it for refinance and.
And
Also.
it's the owner bought it with a TIN number, and now he wants to refi. So the cycles, what are the rules? You follow the same rules?
Yes, so basically, again, they are just, so they try to refinance the property. Yeah, so we use the same requirements in terms of their FICO
And
score.
use the same, let me say, the rate. Interest rate.
Refinance, rate and term refinance and purchase are usually to have this, almost the same rate. Right, almost the same. If it's a cash out refinance, and the rates tend to be higher. So yes, so whatever, so you asking if the
They
rate
say that
would,
they have 8%
uh-huh,
or 10%.
right,
How much, if they have good credit,
right.
what could be the rate for refinance?
Then we will have to run this scenario for you, but what I have seen recently is range is gonna be probably about 8 to 10% range, right? So it depends. It's like a non-QM product, so it's just your like bank statement loan, your DSCR loan. So those are from probably 7 to 9 on the bank statement and DSCR loan. But on the IT number, I've noticed is probably about 8 to 10%. It depends on the FICO score. Yeah.
8%.
So if they have 8%, at this moment, it's better to keep it like that.
Well, we-
not to refinance.
Well, we don't want to say that unless we know the situation first, right? It's like we could actually put in the scenario for you and then run the, we will be able to get the rate for you online. So we just need to plug in the information, and we have a non-QM portal we use to generate the rate for you. Yeah, so
For
we could,
example,
yeah.
On a refinance, on your
Sorry, guys.
client, they have, if they have a better FICO score or they have more LTV, since when they bought the property, that can help them on the rate too, you know? And if they want
Right.
to do a rate in term, but if they can cash out, also it makes a difference on the rate. So it depends, and depends what the situation is,
Yeah.
you know, so we will have to talk to the client, see what's the new FICO, the LTV and all that stuff that will give you the rate,
Yeah.
if it's lower or if it's just rather stay the way it is.
Yeah, let us run the scenario for you, and then if it makes sense for them to refinance, and then you can tell them that.
They can
If
save
not,
a little
then,
bit, if
yeah,
not,
yeah, if it makes sense, right? So we can actually do that. It takes a couple minutes for us to run the scenario for you. Yeah.
Thank you.
But Gus, Rupik,
Well, I was following the same question. If it's, like Rose is saying, right now, 8%, it's not worth it for them to refinance because it's gonna be the same thing. What
Right.
happens if they cash out,
uh-huh.
so the rate will go higher?
Well, they will get whatever rate is the prevalent rate, the current rate, basically based on their, loan to value, based on their FICO score, I mean, credit scores, and type of property, right? So,
Well,
yeah,
it's the same. Score is the same, they haven't changed, that's what they bought it 3-4 years ago.
right,
It's
okay.
not gonna change anything. Job
What,
is the same.
remember 3-4 years, the rates were a lot lower than
Lower,
now, yeah.
yeah.
Well, it depends on what type of program they use, of course,
That's
right?
what we're using,
Yeah,
same
The
scenario,
same program,
8%.
okay, okay.
So
Yep.
if
For
you-
sure, right now is
Higher.
just
Higher.
because,
It's
yeah,
higher.
higher, because, conventional loans rates are also higher than a couple of years ago. So yes, the lenders have all, the non-QM products have been higher too. The rates are higher too, for sure. Jeffrey, do you have a question?
On this specific Itin loan program,
Right,
let's say the scenario for my client, let's say he has a 740 FICO. He qualified for 20% down payment. What's the best rate you can give it to him?
We will have to run the
yes, we will
scenario.
run the scenario for you.
There's a
Right.
kind of
We
property.
run the scenario.
Yes, a very online, and it takes a few minutes after the class, we'll run the scenario for you easily. Yeah, no trouble at all.
Okay.
Okay,
Thank you.
thank you so
guys.
much, everybody, for attending. Thank you. And if you have any questions, feel free to, of course, reach out to Brenda, myself, anytime. Okay,
Thank you, Reza.
thank you, thank you,
Thank you, guys.
thank you.
Jeff,